Onto your markets news now. Asian stocks fell overnight on a renewed rise in both global bond yields and the dollar. That will ultimately mean tighter financial conditions. Chinese shares were weaker, with growth stocks leading the downward trend after parts of Shanghai began imposing new COVID-19 restrictions. In Japan, the Nikkei was 12 points firmer, while the Hang Seng slipped 0.7% and the Shanghai Composite Index lost 0.8%. All right, we're going to now find out what's been happening on the markets with Bright Khumalo. He's a portfolio manager at Vestact. Thanks very much, Bright, for joining us. What are some of the major issues that are driving markets today?
There's no shortage of issues if you're looking for issues as an investor. But as long-term investors, we try to brush those aside and just focus on valuations, and this is what we enjoy doing.
Yes, indeed. Now, we know that, one of the big themes, the economic themes that are playing out is this whole higher inflation story. And we understand that if there's higher inflation, it can make investors a bit risk averse to go or to remain invested in equities. What's Vestac's approach? I know that you're a long-term player, but what's your approach with stocks generally speaking? We know that your concentration is mainly offshore. Do you de-risk a little bit, or you stay in the shares that you've invested in because you believe they're a good thing for the long term?
So I'll be doing a disservice to clients and potential clients if I told them that it's, to get off the market now post hoc, which is, not advisable. An interesting conversation that we are having with clients that do have capital on the sidelines is encouraging them to actually come into the markets and participate a little bit more in terms of finding those opportunities to invest in for the long term. So I think at this point we could say that we are buyers of equities because of the big re-rating that we've been seeing in some of the businesses that we like.
And then let's take a look specifically at Naspers. I know you like looking directly at the stocks. Yesterday, though that stock was up by about 8% or so, are there any particular factors that drove the Naspers share that high? Because we know that Naspers and Prosus have suffered somewhat in recent months. But is this a trend for a better trajectory for Naspers?
Look, there's been a couple of tailwinds for Naspers and Prosus, in the form of Tencent, because yesterday we saw the Shanghai regulator basically going ahead and approving a lot of video gaming titles, essentially, and that was very bullish for technology stocks, both in mainland China, and obviously most of them are listed in the Hang Seng Hong Kong, stock exchange, that side. So that was very good for those type of businesses, and naturally good for Naspers and Prosus, as they hold a third of Tencent, a company that basically makes about 2/3 of their profits from these gaming titles or video games, if I have to say that, put that differently. So that's on the first front. The other big news in terms of Naspers and Prosus, why they're up today. We saw basically Alibaba surge about 27% in New York last night after the rumors that, the Politburo is thinking of reviving that Ant Group listing, which, is also another company that was associated with Alibaba and obviously Jack Ma. And so that's also taking, the tech stocks up in the green with it. And we'll take the good news that we can find in this type of market. So we like what we're seeing from that.
Speaking of good news in the retail sector, Mr. Price, they were out with robust annual results today for the year ended specifically the 2nd of April 2022, reporting headline earnings up 20%. Just unpack for us some of the highlights that came out of their report to the market. And do you think that they're a sure bet in terms of investing in?
I don't know if there's anything that's a sure bet in equity investing for the long term, but if you had been invested, in Mr. Price for the past 10 years, you've definitely made a lot of money. Looking at these current results, like you were saying, earnings were up about double digits, 20.1%. This is on the back of, strong revenues, up 23% for the company. this is mostly through great execution from management, because in that very same period, you compare these numbers to other local, retailers. They haven't actually grown their earnings this much. Or even if you want to look at top line, they haven't grown their top line this much. So kudos to that management for doing what seems like a very hard job in a shrinking consumer environment, considering the fact that we don't have high employment in South Africa. So kudos to management for that. Some of the divisions that have done well, obviously it's the discount clothing and homeware. Homeware is still, showing signs of resilience there. So Mr. Price has been a decent performer, in the last while, since I actually started, looking at markets as a career.
Excellent. Bright, we're going to leave it there. Thank you very much for your input as always. Bright Khumalo, he's a portfolio manager at Vestact.